We're sitting about midday on the trading day. You're looking at Walmart stock. WMT is this ticker symbol. It fell down to about 94.5 at one point during the early morning session, settling in about 97.25 right now at the time of this recording when I put this chart up for Walmart stock. The thing is, this will go south from here. We've seen the highs basically. Now, we may move sideways for a period of time with Walmart stock, but once we get the effects of the tariffs, higher interest rates, what the Federal Reserve is going to do, their reaction to tariffs and current inflation, this will basically contain the upside for Walmart stock. Walmart stock itself operates on some pretty thin margins, and I have the gross margins I'm going to show you. They're only about 2.5 to 3.25 for net margins. Bottom line margins. So with these tariffs, should we see continued tariffs coming from China, which a vast majority of Walmart's products are made in China, you're going to see that revenues are going to decline. The person who shops at Walmart, finite incomes. Everything being brought into Walmart at this point is going to see an increase of 10% on the wholesale basis. How that translates to Walmart on the shelves, maybe about 3 to 5% increase in price at the shelves. Still, the Walmart shopper, consider who that is. This is someone with a finite income. They're not traveling Fifth Avenue buying whatever it is they buy down on Fifth Avenue. And when you consider that consumer and how these tariffs are going to impact their capabilities with a finite income, you see how forward guidance from Walmart itself, lower, makes sense. But this is just, Walmart is the effect. There are many effects. You have to look at the cause, the tariffs. This is self-induced. Fine. Now, my take is on this, I don't really care about the politics. Sure, I'd love to see the budget get settled. I'd love to see zero deficit. Would love to. Whatever happens there, happens there. In the meantime, we have an executive CEO running this country, and he is ripping everything up. Fine. How do I make money in the stock market based on that? Looking at Walmart, this should give you an idea as to the direction of what's going to happen with the stock market going forward. S&P 500 just yesterday just hit an all-time high again. And I've been saying over the past 2-3 weeks, I think that's it. I think we are literally looking at the highs we're going to see for some period of time. We are no longer in business as usual when it comes to the economy. What are the effects of that? You're going to see lower stock prices. Walmart stock clearly getting hit today. That's it. We're going to see prices on Walmart stock that we haven't seen in a couple weeks, and then we're probably going to continue to go lower and struggle to go higher from there. Again, I am putting out another video on XRT ETF. This is the retail sector ETF. This whole broadly based retail sector, as far as I'm concerned, the take on that, they're going to take a hit. Walmart stock will probably move sideways from this point and probably continue lower. Maybe we see a drop of 10 to 15% throughout 2025 on Walmart stock itself. The stock market itself, again, S&P 500 just tapped a new all-time high yesterday. We're probably not going to see that price again. I wanted to kind of break down. This is a quote I got out of a news. And if you can read that real quick, I don't need to read it to you. It shows that the forward guidance is really what the issue is with Walmart stock and the big sell-off today. Walmart stock at one point trading at 104 down to 94. That's $10. That's nearly 10% of a drop. But that was in after hours. Liquidity is a little drier for Walmart, even for Walmart stock in the after hour markets, pre-market actually. So these adjusted earnings per share, which really going to affect Walmart stock in the sense that what we're seeing is razor thin margins. You have investors chasing after that yield. You have alternatives now. The U.S. 10-year Treasury should be looking real rich to you right about now. U.S. 10-year Treasuries trading at about 4.5%. Your yield on Walmart stock is less than that. The risk variables are much higher for Walmart stock should the economy restrict too much. We just got CPI data points where the Federal Reserve is going to be forced to deal with higher inflation for longer. Tariffs. This is the other variable. This increases costs across the board. How the Federal Reserve reacts to that depends on price activity. More likely than not, they will keep interest rates higher for longer, but eventually have to lower interest rates. And if you've been following me for any period of time, I'm loading up on TLT ETF for a long haul move. So what will happen is, as stocks like Walmart stock sell off, the stock market itself sells off, that money comes out of the stock market, looks for a safe haven. Treasuries. Those safe havens turn into profits later on. All that buying of treasuries keeps price higher, which keeps interest rates lower. TLT, ETF. Keep looking at it. Watch some of my videos on that. Here is a look at, on a percentage basis, you can see this is S&P 500 versus Walmart stock itself. They look like they want to converge real quick. That Walmart stock itself might have gotten ahead of itself just in January. You can see the big jump there. This is the 4-hour bar chart, I'm sorry, the 1-hour bar chart on Walmart stock going back into mid-December. So S&P 500 itself didn't really move too terribly much in that period of time. Walmart stock moving far too much. Now I want to point out two things here. XLY ETF, discretionary spending ETF. This is a sector, the discretionary sector is, so there's the economists look at discretionary spending, the stock markets look at discretionary spending. Discretionary sector is an entire sector within one of the 11 sectors in the S&P 500. Economists look at discretionary spending as you earn income, you pay taxes, every penny thereafter is discretionary. The stock market looks at discretionary spending as, oh, you want to go to Chipotle instead of eating a bowl of rice at home? That's discretionary spending. Walmart would be considered discretionary spending in the sector itself. So I wanted to compare XLY, which is sort of the purplish. XRT ETF is the bluer. That's the one on a percentage basis. When you look at this, you can see that the downside potential is probably more likely higher of a downside or bigger than a downside than, say, the discretionary expenditure sector itself. Discretionary expenditures is a sector does very well long-term, or has done very well long-term. Great sector. If you're looking for sector investing, technology obviously is a great sector as well, but this is one of the other ones that I would recommend you look at as far as investment opportunities there. But that game might be over for now. In the future, you could probably pick it up. But I wanted to kind of compare how these sectors are moving. I did see some reports that discretionary sector itself was leading the Walmart stock sort of sell-off. I didn't exactly see that, but yeah, I could see where you're saying that. This is a bigger look at all four. So you have Walmart stock as the bar itself. You've got the S&P 500 there is in the solid red. XLY is the pinkish purplish, and then XRT ETF is the bluish purplish. I don't have control over those colors. If I do, I don't know how to do it. But that gives you an idea as to what's going on long term. Walmart stock has performed very well. Discretionary spending, as I mentioned before, great sector to invest in. Instead of cherry picking one particular stock in general, look at the whole sector. But that game looks like it's going to be over for now. We've got these tariffs. Those tariffs are going to eat into the economy. It may save the Federal Reserve in the sense that these tariffs are going to prevent the Federal Reserve from having to raise interest rates, because those tariffs are literally going to take money out of the economy, restricting money growth, which is really the fuel of the economy, which drives the stock market, broadly speaking. The Fed may have to wait for a while before it makes a move. Eventually, yes, I do believe that they do lower short-term interest rates. The deficit would have a bigger effect on long-term interest rates. I do believe long-term interest rates move lower. It's going to take some time. Again, keep an eye on my TLT ETF trades that I have putting up. I put up a lot of videos on that. A lot of guys follow me on that. Real quick, I want to go through some of these numbers for you. Walmart gross margins, they're only looking at about 25% gross margins. Top line margins. Operating margins thereafter, 4%. Net margins, 2.7%. Razor thin. So there's no cost savings going to be passed. Walmart's not going to eat any of these costs. They're basically going to say, oh, that's what those products cost. That's what they cost on the shelves. There's no room there. So this eats directly into consumption of individual consumers. Earnings per share, expectations slightly lower. I did want to kind of look at some of these numbers briefly to show you how thin this all is. Price to earnings ratio, 42.6 going through 2024. Their calendar year is slightly different than the rest of the stock market, but from a yield perspective, price to earnings ratio, far too high. This could easily drop by 50%, down to 21 price to earnings ratio. Given a price to earnings ratio with Walmart, that pulls the stock down another 10% easy. Projected revenues, this is where they really said going forward, they only see a 3 to 5% increase in revenue versus 5 to 7.5% previously. Now, Walmart themselves, I've read a lot of information on Walmart regarding forward guidance because their forward guidance was so kind of slightly jaw-dropping, which is why Walmart stock sold off as much as it did. A lot of people said that Walmart typically guides conservatively, very conservatively. So we may see Walmart revenue come in at expectations now, these new expectations, or slightly higher. But we have no idea how these tariffs are really going to play out. It's one thing to previously in 2018, we saw tariffs on steel, aluminum, washing machines. How does that play out in the broader economy? It doesn't really. Yeah, there were some effects, minimal. And because of that, someone is emboldened to say, see, it worked before, let's just do it across the board. That's a whole new ballgame. Regardless of the politics, whether you agree or disagree, this is the policy. And my policy is simply this: how can I make money in the stock market based on policy? We're no longer business as usual, where the stock market just keeps going higher and higher and higher. Business as usual. Keep the revenues expanding. The Federal Reserve is restricting the money supply. They're lowering, they had increased interest rates. So it's no longer business as usual. So that uproot is already happening. Plus we have other policy shifts happening out of Washington, D.C. So this is no longer business as usual. So when we watch Walmart stock selling off based on new policy shifts, this should be a serious wake-up call to anyone sitting there saying, should I take profits? We're seeing what the future is. We've seen the highs. Projected earnings per share, wobbly. We're probably going to, for 2025, we'll probably exceed the 250, probably. But we do not know how these tariffs are going to play out, and how the Federal Reserve reacts to it, and what the overall shift is going to be in the economy, because this is so broad-based. There are other aspects of this that economists probably haven't factored in. Take a look at Canada, who they're going into grocery stores. I mean, I see video after video after video. Canadians are going into grocery stores and just walking by any American flags and saying, whatever I have to spend, I'm supporting Canada. And you know what? Great, awesome, good for you. That's policy. That will affect the bottom line. Probably has not been factored in to a lot of economists' projections. What if Europe has to do the same thing? I wanted to break this down real quick. Earnings per share at 250 with a price for WMT price right now 97.5. It will shift. Walmart stock is probably going to, again, I think it's going to move lower for Walmart stock. But when you break this down, that 250 projected, sure, we might beat it by a couple pennies, maybe 10 cents. But your yield on Walmart stock is only going to be 2.56%. Your downside risk could be far greater. What's your upside potential when you're looking at possibly investing in Walmart stock? Your downside is far bigger than your potential upside. But then you look backwards at the 10-year yield. Okay, so if the stock market starts selling off, people get out of stocks which have a higher risk parameter at this point because of the dislodge of the economy, broadly speaking. They get out of that, and where do they go? Straight into treasuries. So you're looking at a yield of 4.51% right now. Eventually, at the end of 2025, maybe into 2026, the Federal Reserve has lowered interest rates because price pressures are no longer an issue in that regard. But the next issue is unemployment and slower economic growth, one of the things that the Federal Reserve has to balance by law. You're sitting on treasuries with yield of 4.56%. If the Federal Reserve drops short-term rates to 3.75%, you're winning all day. Plain and simple. Versus the risk potential of buying $2.50 per share potential earnings. My take on this is real simple. Walmart stock will continue to move sideways to lower from these points. We will get more and more economic information as we move forward. If you've been following my content for any period of time, I'm buying a lot of TLT ETF. It's the Treasury Bond ETF. It's the big one. All right, there's plenty others. TMF ETF is the 2X of the same thing. Now, I've been getting in on TMF. I've been also doing TBT ETF, which that one is the inverse. I've been front running some economic data points. I don't think I'll be doing that coming up for non-farm payrolls coming up. Make sure to follow my content on that one because I know a lot of guys do follow me on that. I'm not doing that coming up because I think we're going to see a bad number coming up. And TLT ETF will spike higher. TMF, obviously, 2X is going to do exactly the same thing. That's my take. Walmart stock, wouldn't touch it. Make sure to hit the like and follow button. We'll see you in the next video.